Hello, entrepreneurs. Joe DiChiara back once again with another amazing version of Joe DiChiara Presents. And today, let me share my screen with you here. I have something special to announce and share with you. And before I do that, let's do this. And I do have a new book coming out. Here it is. My itty bitty S Corp book. It's being re-edited. They're reprinting a proof, and it should be coming out in a couple of weeks. And I was just thinking about what, the time and effort that I put into researching and all the years of experience that I have working with S Corps, and the fact that we are still debating whether or not people should be an S Corp or an LLC or even just stay as a sole proprietor amazes me, because it's pretty clear cut from my perspective as an accountant, as a tax preparer. And if you don't know me, if you're just hopping on, you never met me before, my name is Joe DiChiara. I am a CPA, serial entrepreneur, and I specialize in working with brand new business owners and established businesses that are all mangled that maybe I could help fix. And so many times people have come to me as with an LLC, and I show them exactly on their tax return, not talking theory and what if. I can show them factually on a tax return what the actual costs are. And, this sort of thing, it really almost angers me sometimes that I see professionals out there and attorneys, and I understand that LLCs provide legal protection for their members, but that's it. There are no tax benefits to being an LLC unless you are an investor in passive activities. That's what LLCs were created for investors in things like oil wells and real estate and coal mines, because they wanted the benefit of the pass-through tax write-offs without the legal issues. So they created a legal structure with passive investor tax benefits. Because if you're an operating entity, I'm going to show you what happens. When you become an LLC, there is no tax classification. It's as simple as that. You are what they call the default. You default to what you would be as if you weren't an LLC for tax purposes. Now, we could go into the whole thing about it's more complicated to be a corporation than an LLC. And that's really, really not the case. Not when you're talking about a single owner, small business entity. And what I'm talking about then, when I'm talking about an operating entity, is a business where you operate it, you are actively engaged in it, and as a sole proprietor, your net profits are subject to what we call Social Security taxes. And it's as simple as that. Well, it's not really as simple as that because sole proprietors get audited 1,000% more than S corporations. So for tax purposes, folks, I am sorry, but I will never, ever, ever endorse anybody being an LLC unless they are bringing in partners and they got some kind of weird, financial arrangement. That's a reasonable reason for having an LLC. But most businesses, 99.9% of the businesses, of the 30 million businesses out there, are single owner entities and 25 million are still sole proprietors, which means you could be an LLC, but you're still classified for tax purposes as a sole proprietor. So let me just show you a very simple scenario here. And I'm going to share my screen again. And I think, yeah, add to stream. There we go. Okay. So now this is the tax form that hits sole proprietors and partnerships. So if you're a multi-member LLC, you are considered a partnership for tax purposes. So whether you're an LLC for a single member LLC or a partnership, because you could see on this form, this is form Schedule SC, form 1040, which is your personal tax return. And over here, you're going to put your profit. Now, if it's from a partnership, and I'm going to use $10,000 as a profit. Okay, and we can go through, and it doesn't matter. The higher it goes, 10,000 is a good amount because a lot of businesses, even if it's a side gig, if you're making 10 grand in a side gig, that's not too bad. And there's a lot of people out there that are doing that. So let's just say it's 10,000 from a partnership or a Schedule C. Now, a Schedule C is the form that a sole proprietor files. And now, probably the bulk, the majority of people that are sole proprietors and are filing this, probably, I don't know if they even look at their tax returns and see why they're actually paying taxes. So at 10,000, if we put $10,000 on this line 2, they want you to multiply it by this, and then you come up with something else. And the bottom line is, let's say roundabout, it's about 12%. Okay, so that's going to be about $1,200 in Social Security taxes. Now that's different than income taxes. And you have to make that distinction because if you are a person with, let's say, a hot dog stand and you're making $10,000 a year, and that's way below the poverty level, folks, way below the poverty level, you're still going to have to pay $1,200 in self-employment tax when you do your tax return. Now, if you made $20,000, it's going to be like $2,400. So that's if you're a sole proprietor or an LLC. So now you could be an LLC and elect to be treated as a corporation, which is an option. I'm doing that for I do it all the time. I take people that were LLCs and we classify them as corporations, and then we make an S Corp election so that they get the tax benefits. and the protection. It's not just legal protection, it's protection against the IRS. Because the fact is that the IRS doesn't want to audit S corps. They don't bother. Not with people making, a couple of $100,000 a year, or even tens of thousands a year. So let's just go to my trusty little spreadsheet over here. And I'm gonna just plug in the numbers because and I use 15.3. We could change it to 12 if you want to get technical about it. So the hot dog stand guy that's making it, let's say he's making $20,000. Now he's going to pay $2,400 in Social Security taxes. So his income taxes are zero, because when you make that amount of money after your standard deduction, and this at that amount, you might even get the earned income credit. It's so low, but you're still going to have to pay the $2,400. Whereas if you're an S corp and there's a $20,000 profit, you pay zero in self-employment tax. So why is this even a question? Now, yes, you have to file a corporate return. And then some people would argue that you have to take a salary from the corporation. That's not written in stone. Okay? That's the first. If this was $50,000, I would say that person has to take a salary. Okay? Because now at least at $50,000, they can take a $20,000 salary and pay 15%, 15.3% on the salary. So now they got a $30,000 profit. The corporation has 30, and the individual has a $20,000 W-2. We've paid $3,000 in payroll taxes, basically. Let's say $3,500, but you're still ahead of the sole proprietor by thousands of dollars. Now let's so maybe you got to hire an accountant now. Well, you should be hiring an accountant anyway if you have a business. So that's my story, folks. I'm sticking with it. I am trying to get my mouse to cooperate. So I am going on a campaign to promote S corps, not LLCs. Anybody comes to me that wants to be an LLC, I will show you, and I'll plug the numbers in the tax program. And that's really what I don't get. Lawyers promoting LLCs, I could see, because lawyers don't do taxes. But folks, here's the fact. When you go into business, legal issues are only part of it. Hopefully, there will never be any legal issues where you'll actually need that protection. And the truth is that most people never need it. Most businesses never get into any kind of legal issues. But most businesses have to pay taxes. So what is more important? Yeah, it's important for the protection. But I would like to have the protection and the tax benefits. And that's why this being an issue mystifies me. And I will debate. I challenge anybody that you want to debate me on it. We will take real case scenarios. And if you could convince me, you will overturn 35 years of experience, not only preparing and advising small business owners, but actually registering them, which is going to be another issue, which there's a whole controversy over where should I incorporate. Well, it's in black and white. You're supposed to be registered where you do business. And I think maybe I'll cover that tonight. Okay, so we're going to have a lot of fun over the next 3 months because we are gearing up for tax season. Now is the time to start preparing. And that's my story. I'm sticking with it. Joe DiChiara, thanks for watching.